Hi, this is Greg McCoach, editor of the Mining Speculator. I'm here today with President and CEO Brad Rourke of Scottie Resources. Brad, welcome to the show.
Greg, nice to see you. Thanks for having me.
Yeah, a lot to talk about as we're getting ready to rock and roll here for the summer with drilling. There's a lot of news that you're generating right now. Let's talk about the AUX deal. When you anticipate that closing and some of the implications with this bought deal financing that occurred that you really weren't expecting.
Sure. So, we put out to the market that we were going to amalgamate AUX and Scottie. Essentially, Scottie was going to absorb the shares on a one-to-one basis with AUX. And there was a whole bunch of reasons why we thought that was a good idea. And the day we announced that, the phone started ringing. Our idea behind is bigger is better. If we want to attract bigger partners to help help pull on the rope, that's what we do. Putting this together make sense to bigger entities. And then lo and behold, we have a financing that I seriously had no clue about when we actually put the news release out on the Monday. So, but when you look at who's done it and a bought deal, quality people. So we're excited, and it looks like our ideas are playing out. We still got to go drill our holes, but I think we put ourselves in a very interesting position of strength we've never had before. Not only do we have a commanding land package now that can be looked at from a geological system point of view on the bigger package. We also have the budget now we've never had to work with. That being said, Scottie is still the focus of the whole company, even though we have an awful lot of optionality now.
Oh, for sure. I mean, with big deep pocket partners behind you, we could do a lot of things on the AUX ground. That's very exciting ground as well. But priority right now is our Scottie Gold Mine and the trend and the results that we've had last year, adding on to that. So let's get into that now, because that's the focus. You hope to be, actually having a drill rig turn by first week of July, probably.
Yeah, I think that's reasonable. First, I personally would love to think I could be up there June 20th, and I'm heading up there tomorrow. But I do know that the snowpack it's a deeper snowpack this year. Still I know that SCOT is just drilled up to Premier, and I was talking with Dave Green yesterday, and he's like, snowbanks are still 10 feet there, so it moves quickly. I'm familiar with the area, but it is a bigger snow year, so July 1st. But if I can get in there earlier, I will. We've got everything set up. Even lumber's in town of Stewart, and I have people there now, and contractors are waiting to go. So good. As soon as we can.
Yeah. Hey, well, just got to wait for that snow melt. So, okay. So once we get drilling, what are our top 3 drill targets? What's the answer that we're looking for? What's the unanswered question that we need to get resolved with our drilling?
Well, I think from a lot of the feedback I'm getting is most of the questions now are about resource. And so, up until now, our story has been, and we stick to our knitting, is we're looking for that pathway to multi-million ounce deposit. We modeled it. We've done 2 smaller drill programs up to this point. I think the answer that everyone would like to see, and ourselves personally, is, okay, are these things have size? We've got a whole bunch of really exciting intercepts here, and it's all kind of scattered all over the place. Can we thread these things together that makes economic sense? We believe this is the year that we can actually show that. Sure, I might not have a resource to publish at the end of this season, but if we take Domino, or let's take Blueberry first. That's, the Blueberry for us is going to take, 50%, at least 50% of the drill program in and around Scottie. Okay, right. So when I say Scottie, I always think Blueberry, Scottie, and then the Domino. Half of that drill program, if not a little bit more, will be done on Blueberry because of that new discovery that we found in 2019 last year, we did a real tight drill program around this surprising broad zone of mineralization that surprised us, just to try and understand the geometry and what this was, because it's so much different than what we were actually thinking we were looking for. And so we had a series of 11, 12 holes to try and understand what's going on there. Now, there's certainly something moving north-south, which we've never entertained, near surface. It's different geology than at Scottie, where Scottie and Domino was, without a doubt, is a underground situation, high-grade small veins system. This Blueberry thing's a little bit different. We're still learning ourselves, but I think we have enough evidence that we're going to go put 5, 6, 7,000 meters just at Blueberry, because we have a whole bunch of evidence up to the north of this and to the south of it that we found last season. Didn't know our drill program is going to be as good as it was. In fact, I ended $3 million in the bank because we weren't getting the feedback in time. If I knew Blueberry performed as well as it did, I would have spent every one of those dollars. So, but this year, what's different this year than it had maybe in the past few years is we have the confidence now where we can do bigger drill programs because we've tested these areas. It's fitting the model that we have, and because we've done pure exploration around these 3 zones, we have a lot more confidence that we can actually drill these with a little bit more confidence that what we were hoping there seems to be there. And now we can vector in off that and do substantial drill programs on all 3. But with Blueberry, we'll do as much drilling as I did at the whole program last year, just on that. It'll be my cheapest drilling, skid-based, and that's more of a bulk tonnage situation. All those beautiful intercepts are all near surface.
Yeah.
In the 6 grams over 22 meters is only 6 meters underground.
Yeah.
So,
well, Brad, what it feels like to me is that last year we built a really good foundation, and had you had the assays earlier, you would have spent more money last year and probably gotten further along. But this year seems like a breakout year to me, where you do have the understanding, you have the budget, you know where you need to go. So let the drills turn and let's see what happens there. So
yeah, I think we had a very successful drill program last year. Didn't get quite rewarded for it because of just the general market.
Oh yeah.
Liquidity. And it didn't matter what you'd done. So you look at our market cap, you look at our financial position, and then just look at, I think we have 7 past producing mines on these new tenures. Again, our focus is at Scottie, but we know that this is get interesting to other people now. So that just gives us optionality. So we've got we got a tiger by the tail right now. We're excited to drill, and you still buy me at the same valuation as you could last year and the year before. But oh my God, is it a different company? Good
value at current prices right before a major drill program. I think it's excellent time for people to jump in. So
it is. I believe, and I'm going into my 6th year. I remember when GT Gold was a $40 million market cap company. Yeah. Tudor, I was there, front row seat. Skeena, we have a little bit of a budget that we might go up to that next level. And again, those are all fantastic success stories that are happening all around us. So we haven't stumbled yet, and this will be our first big year. This will be a substantial program for us. It's a real program.
It's going to be fun to watch.
Excellent.
Cross our fingers. Let's just see what the assays tell us. So with that, Brad, I think we're at the end of our time. So, good luck, and we'll be in contact. Call me anytime when you want to do an update like this.